Good morning, everyone. So, quick update on cryptocurrencies. So, for those of you that don't know, my view on cryptocurrencies is that this is, first of all, it's a liquidity trade. The market cap is just too small for it to be anything more than associated with liquidity. Big picture, 10, 20 years away, I think Bitcoin has the characteristics to be a reserve asset. In other words, similar to gold and similar to treasury bonds. That being said, while we're in that phase where it's influenced by liquidity, there's going to be a fantastic opportunity. And I've been following the chart for the past couple of weeks because I think there could be some clues here. Michael reached out to me yesterday and asked me to talk about it, and funnily enough, it was something that I wanted to talk about because I think it's very relevant to the trade war with China. And the reason I say that is because if the United States are going to concede, you'll start to see increased liquidity because the Federal Reserve Bank will have to slow down on hiking interest rates, and that increases liquidity in the market. Why do I say Bitcoin is a liquidity trade? The fact that you can buy Bitcoin on your credit card and that the majority of the market is retail investors, right? So retail investors are sensitive to liquidity and the cycle. When we've got contracting liquidity, you see capital expenditure cut back, you see employment slow down, and that's when you start to see consumers tighten their belt. And so with retail traders who make up most of the Bitcoin market, they're very sensitive to that. And so as it started to rally, I was asking myself, is this giving us the first clue that we're going to see increased liquidity? Because it gave us the first clue that we're going to see reduced liquidity back in December 2017 of just last year. And I'm asking myself, is this pattern being forced in? But I'll share with you exactly what I'm seeing. So an ABCDE pattern for a fourth wave, right? It's not a perfect triangle, but it's perfect for a fourth wave, where this final E wave will break up into an A, a B, and a C, and it will complete here. Now, one of the characteristics we need to see for an ABCD is increased volume on the D wave. And the problem I have with this is we had decreasing volume on the D wave. In other words, when you have increasing volume, it gives you the first signal that that's where we break out after we hit the E wave. And we haven't broke out, and that was the first sign that that was not ready to happen. If we're to look at Bitcoin from a trend following perspective, and we use the 200-day moving average to give us a guide of where the trend is moving, we're below the 200-day moving average. The 200-day moving average is still trending downwards, so we'd need that to flatten out before we start. We'd need it to flatten out, and then we'd need price to break above it, and that will give us conviction that the exhaustion on the downside is in, and we should start to push higher, right? So the 200-day moving average will be key here. As well as that, in the short term, the 21-day moving average, which represents 1 month of trading, there's 21 trading days in a month, we're back below the 21-day moving average. We need to get back above both of those moving averages in order for me to get conviction that this is going to push higher. And if it pushes higher, I think it sets the tone for every other asset class out there. Now, I happen to believe equity markets are going to roll over and reduce liquidity, and I think Bitcoin will suffer for that. Now, I could be wrong, and I'm relying on the chart now to tell me about Bitcoin. Bitcoin fundamentals right now are whatever you think it is. So in the gold market, we've all got clear. So if you look at equities, it's clear what drives equities. If you look at Bitcoin, everyone has a different view of what Bitcoin is, right? Is it going to be a transacting currency? Is it going to be a reserve asset? Is it going to be for transferring capital? It's very subjective what the actual outcome for Bitcoin is because it's still in the speculative phase. When price keeps rising at a dramatic pace, nobody's willing to sell it. Nobody's willing to trade it. So it makes it very difficult currently for this to become an actual currency. Because if it's going to go up 10% per day, who's going to go into Domino's Pizza and buy a pizza with that, right? It would be the most expensive pizza that was ever bought. Just like the gentleman that in 2008, 2009, I believe, that bought 2 pizzas for 10,000 Bitcoin. I'm sure he's pretty disgusted right now because it was worth a couple of $1 million. So in that rising environment, the rising price environment, it's very hard to see Bitcoin become a currency because nobody will want to sell it as it appreciates consistently. So for right now, I'm relying on the chart pattern. This could be an ABCDE pattern, but the wave D did not have enough volume. And it failed at the overhead resistance. So what we need right now is to break resistance, break the 200-day moving average, and Bitcoin could be a buying opportunity. As I said, I think this is going to come on increased liquidity. Increased liquidity will come from the Federal Reserve transitioning from a hiking cycle to flat. In other words, they'll stop hiking. and then the next move will be reducing interest rates. So for Bitcoin, I just don't think it's ready yet. I think we can let it play around for a couple of weeks, and I think it'll be an early indication of liquidity and an early indication of when we should be getting out of our short equity positions. So with that said, I'm going to leave cryptocurrencies there. If anybody has any questions about this, please do reach out. I'll be delighted to hear from you. And have a wonderful day, everyone. All the very best.